Hey Money Movers, welcome back to Millennial Money Moves with Nadia. Today I want to talk to you guys about, I just kind of want to redefine what a stock is, some different types of stocks, and give you guys a stock pick. So I'm geared towards beginners and I want to make sure that I don't just get in too deep and go over the heads of people who are just starting. Not that I don't think you guys can keep up, but just because it's a lot of terminology and sometimes it can all get kind of confusing and be hard to understand. I have these new glasses, but I just realized the reflection of the ring light is probably showing them, so I'm just going to casually take them off before I get started. But stay tuned, I've got a lot of good information for you guys today.
So Nadia, what's up?
We making money moves.
Who making money moves?
We making money moves.
You making money moves?
We making money moves.
We making money moves.
We making money.
Welcome back. So as promised, I want to talk about some stocks, some growth stocks that I think are a good buy right now. But let's just backtrack and talk about what a stock even is. Maybe this is your first time seeing one of my videos. And those of you who have been watching me and you've seen all these changes in my channel, thank you so much for sticking with me. It really doesn't go unnoticed. I love it when you guys leave comments or message me. I say that probably in every video, but it's so true. I genuinely love hearing what you guys have to say or hearing about your journeys investing. If you guys have been watching, you hopefully saw my last video with my friend Noemi. And if you haven't, go ahead and check that out because I think it's really inspirational for those of you who either want to start your own business or get started investing. And maybe you just don't know where to start or you think it's not for you. It is. It's for everybody. And that's what I'm here to remind you guys of and encourage you. So a stock is just a piece of a company. It's a slice of the company that you as a shareholder own. And you know what's interesting about being a shareholder is sometimes you get to vote on certain practices that are happening in that business. For instance, if a company is thinking of getting a new CEO, you can vote on that. Not always, but sometimes you're given the option to. Or if they're thinking about acquiring new businesses, sometimes you're able to vote on that too. Now you don't go in person and vote, but sometimes you can vote by mail or on the phone or sometimes just a regular email. And so if you're investing, be on the lookout for those kinds of emails. Because, you know, you get a say. It's kind of cool that you get to have a say in what's happening. Now, this isn't for every single one, and this isn't all the time, but it is something that happens sometimes. And so I wanted to tell you guys about that in case you started getting emails and didn't know, what they were talking about. And the other thing about stocks, they have the potential to make you very wealthy, especially growth stocks. So there's two kinds of stocks I wanted to talk about today. I wanted to talk about growth stocks and income stocks. Now, growth stocks, you're going to want to think tech. So think like Apple, Facebook, Twitter, those kinds of things. I know you probably don't think of social media as tech necessarily, but it is, and it's a growth stock. Or things with energy, right? And so that kind of brings me to my next point. ChargePoint is one that I really, really like. I've talked about it here on my channel before. I think green energy is kind of the future. And if you've been paying attention to Biden's presidency, you know this is one of the policies he's very big on. Now, no matter what political party you are, it's definitely important to pay attention in what's happening with the world, the news, who's in charge, because those kinds of things and bills that they pass and new laws and regulations definitely affect the stock market. So let's talk about income stocks really quick. So an income stock is more stable. They sell goods and services. For example, think McDonald's or Coca-Cola, and these are the ones that usually pay out dividends. I've made a video on Coca-Cola too. I think that's another good stock. And an income stock is usually safer. I do really like growth stocks. With growth stocks, what's beneficial is they're called growth stocks because they grow a lot and they can grow quickly, but they are risky and they're super volatile, and it's definitely not one of those things you're going to want to look at every day. I stress myself out looking at my high growth stocks, so don't do that. I have a lot of growth stocks right now, and so I'm trying to kind of, trust the process. I know they're good companies, but it's not something you want to look at every 2 seconds because those charts can be a hot mess. But I do like some of them, and I really think, like I mentioned before, that clean energy is going to be the way to go. I think electric vehicles are really important. So let's talk about ChargePoint for a little bit. Now, ChargePoint is the operator of the largest global network of charging stations. September 1st, that's tomorrow, their second quarter financials will be out, and so I'm definitely going to be taking a look at that. I just added some more ChargePoint to my portfolio today, so you guys know I'm more bullish on this one because I really think that is the future. I think we haven't fully hit that EV, kind of takeover yet, but I think it's on the way. So I want to be in this as much as I can. Like I said, I think there's a lot of room for growth for electric vehicles. This is a high growth stock. That being said, it's risky, high risk, high reward. But I do really like this one. I have a way more in-depth video about it, but I just kind of wanted to go over some terms today and give you guys 2 stock picks. So that's one. I like that, and I like Facebook. Now, people are paying lots of money for ad space in Facebook, and it's easy because all Facebook has to do is run that ad. And so Facebook is bringing in a lot of revenue, and because this is one of the ways that they're doing it, we don't really have reason to suspect Facebook will stop making money anytime soon. So I think this one still has a lot of room to grow. People are saying there's a price prediction of Facebook, different analysts, not just random people, price prediction at $500. And with this one, it's one of the more expensive ones, and so I want a dollar cost average into this one. It's going to be in my long-term portfolio. I'm going to stay updated with what's happening with Facebook, but I do think it's one of the safer growth stocks, has a lot of room to grow, and I think it will continue to grow with, like I said, the way they're making revenue. I don't see why that would go away, and I think Facebook can definitely make you some money. And again, with ChargePoint, I wanted to bring up the passing of the $1 trillion infrastructure bill. Now, this has a large portion of it going towards EVs, so there will be more money in that, and I think that'll just make ChargePoint grow even bigger. Like I said, it's high growth, so it is risky, but I definitely think there could be room to grow. The ticker symbol is CHPT. The high is predicted to be 46. That's the upside. The low of 24. Average estimate, I think, around $35. Now, I'm looking, like I said, I just bought some more today, but I'm buying this one on the dips. Facebook, I'm dollar cost averaging in. ChargePoint, I'm buying on the dips. So I think those are 2 that I just wanted to let you guys know that I've been buying and looking into, adding to my portfolio. And those are 2 growth stocks. Now, I didn't give a pick for an income stock, but I just wanted to talk about those 2 terms, the growth stocks and index stocks. And a good way to know if a stock is a growth stock or an income stock is by looking at the beta. You want to look at the volatility of a stock compared to a benchmark. Now, a common benchmark people use, think of benchmark as just like frame of reference, is the S&P 500. I'm sure you guys have heard of the S&P 500, and the beta for that is 1. If the beta of a stock is above 1, that means it's more volatile. And if the beta of a stock is below 1, that means it's typically less volatile. Now, there are always exceptions to this rule, but I think that's kind of a good rule of thumb if you're trying to get a grasp of what's a growth stock and what's an income stock. And I mean, you can generally just Google it too, and there will be articles about it on Yahoo Finance, sometimes Investopedia or the Motley Fool. Those are some resources I like. But if you wanted to see a chart, see some numbers, where that's coming from, you can definitely go ahead and look at the beta value and compare it to the S&P 500 benchmark. Now, hopefully that makes sense. I'm just going to recap. A beta above 1 means it's more volatile, and a beta below 1 means it's less volatile. There are exceptions, but I just kind of wanted to teach you guys that because you can generally kind of use this to tell if a stock is a high growth stock or an income stock. I really like ChargePoint and Facebook for my growth stocks. I think there's lots of money to be made. I think there's lots of room to grow with that one. None of these are short-term positions for me. These are all in my long-term. And income stocks, I did make a video about Coca-Cola before because that's where it's going to be your more goods and services. Now, I didn't do an in-depth dive into income stocks, but I want to make a video about different dividend stocks and income stocks probably soon, because I think that's important for those of you who are just getting started investing. And dividends can be quarterly, monthly, annually, and if you don't have a lot of money to invest, investing in dividends can help you get more money to reinvest into the stock market, if that makes sense. That's just one of the strategies I like to use: buying on the dips, dollar cost averaging in, and dividend stocks. So I'm buying on the dip for ChargePoint because I already have a decent amount of it. And with Facebook, I'm dollar cost averaging in because I didn't have any of that. And so just wanted to give you guys some more background. Hopefully this helps out my beginners. And if you're not a beginner, hopefully you heard some stock picks that you like. All right. Again, please remember to like, subscribe, and turn on that notification bell. Not sure if I said it in the beginning, but it really, truly helps my channel when you guys do that. Again, I can't thank you enough for watching these videos, and please share them if you know anyone who's thinking about investing, they want to start their journey, and they think maybe they don't have enough money or they don't know enough. On this channel, we're giving out definitions, we're giving out stock. Well, I can't give you financial advice, but it's stocks that I'm invested in are the ones that I'm talking about on this channel. Everyone's financial situation is different. Don't ever invest money that you don't have. And please remember that growth stocks are highly volatile, high risk, high reward. So if these kind of stress you out, maybe tech is not necessarily for you, but there are other safe investments that you can make that I want you guys to be aware of. But for my more risky people out there, my younger viewers, I like growth stocks. I'm clearly in them. And so hopefully we can all make some money moves together. All right. Have a good one. Bye, guys.